Good afternoon, this is Adam Tuiaana with RJO Futures in Chicago. Coming to you this afternoon of Wednesday, May 29th, 2013 with your soft commodities report. We're going to start off with cotton. We're going to focus on two markets today, cotton and then coffee. Cotton last traded at 80.71, and that's in the July contract, puts cotton's down 71 ticks on the day. So fairly decent sized day down. In fact, cotton is seen with today 7 days straight of losses. So we have some very large cotton funds and trading funds that are out there that are holding huge net long positions, which is ultimately bearish. At the same time, fundamentally, we're also seeing some reported decent weather or wet weather out of West Texas, which is a major world producing area for cotton. So ultimately that will or should improve some planning for cotton, which a bigger supply means ultimately semi-bearish, so we should see the market continue to have some pressure on it because of that. We since technically violated the 82.22 level since my last video. That 82.22 support area, we hadn't seen that since February 13th. It has been violated. That 82.22 area now becomes our new upside resistance. And then on the downside, we're going to keep an eye on 78.97, which is now our critical support area. Moving over to coffee, coffee last traded 127.95, and that is in the July contract. Also puts cotton actually up 150 ticks on the day, so fairly decent sized day up. I believe this day up to be nothing more than a bit of a correction with more downside to come. Fundamentally, we still have a huge global supply that's out there of coffee. We've had some very sluggish demand coming out of the Eurozone as well as Asia, some pretty poor economic data coming out of China especially, which is typically a large consumer of coffee. We're looking out for the Roya fungus. Has it been able, the fundamentals of Roya fungus been able to provide coffee with any support? Not nearly enough to turn the trend around that it has been down for quite some time. 132.70 is the critical low from April 29th of this year. It has since been violated. We're now trading between the 126, 127 level. We haven't been here since April 2010, so quite some time since we've been at this level with coffee. I am continued bearish, steadily and aggressively so. Down upside resistance is going to be the 132.70 area that was violated. On the downside, we're going to look for support at 125.30, and we haven't been in that area since October of 2009, so keep an eye out for that. Please keep in mind that futures trading does present substantial risk, and it is not suitable for all investors. That being said, have a great afternoon.